It's Tiger Trades. Just wanted to go over some things. So there's a lot of talk that with yields falling and all that, it's a go time for risk assets. But what people aren't realizing is that the 2 and 10 year is still inverted, signaling a recession. It's only had one false positive, if I am remembering correctly. Um, the Fed's fund rate is at 5.33% effectively, according to the St. Louis Fed, between the range. Um, I do believe that there should be another rate hike. I don't think there's going to be, because I think they are going to cut rates, but not for the good reasons that everyone's thinking. It's going to be because they are close to breaking the system and probably have already done a lot of damage. So when yields fall like that, and you see oil peel off and the dollar peel off from some pretty significant runs, you know that it's not turning around because it's normalizing. It's turning around because it's signaling to you that there's something wrong. Sentiment with the U of M consumer sentiment index has been rallying, but I don't think June 2022 is the low at 50. I think we see it go even lower. Probably, yeah, probably in the 40s. So that's going to be really ugly, especially with Apple guiding down for the December quarter. And if those guys can't perform in the December quarter, who's going to? It's freaking Apple. So a while ago, I did a video on the 200-day S&P 500 stocks above the 200-day moving average. I called this double top. It did continue further, and it was confirmed as a double top here. It did rage back, but you got to see this death cross right here, and you got to respect the fact that COVID and the China trade war were way down here, and if we have an event like I think we're going to have, we're going right back down there, and this is what I'm considering a relief rally or short covering, because maybe some people that were short decided that they got enough gains and covered over the next couple days. So basically what I'm getting at is that with all these factors adding up, you are basically looking at a very bleak economy. And actually the other day, something called a bull flattener happened, which is where the 10-year falls faster than the 2-year. And it's not bullish. It's not, don't worry about the name, but it is a flattener. It flattens the bulls. And it shows that the economic outlook going forward is not as peachy keen. Which, if the bond market is usually first to the punch when it comes to recessions, bad news bears, all that. So the move index is actually falling, but it just broke out from this channel, which is what I was expecting, and it looks like it's gonna bounce off this upper trend line and just kind of turn around and move. So once the bond volatility starts going up, and the bond guys are already realizing that there's going to be a recession, and like I said, if we get rate cuts, it's going to be for very, very bad reasons. It's not going to be bullish. So don't get that twisted. Or with yields falling, it's these times are different. You have to pay attention, and you have to read between the lines and really kind of look at more than just a couple charts. And looking at the Magnificent Seven, for instance, that's hogwash. It's 25 to 30% of the S&P 500, something like that, and I don't see that continuing higher, and I see that being a detriment going forward. So that's pretty much it. Um, I'm expecting. Let's see. I'm expecting the 200 the stocks above the 200-day moving average. Oh, that's the wrong one. Where is it? Here it is. So I'm expecting this to come down to 10, where it kind of double bottomed in 2022. And in fact, I'm expecting it to slip lower, maybe to where the China trade war was, which is about 9, or even worse, COVID. But with stocks being what I consider overvalued, and the bond market looking somewhat attractive now with these yields that have pulled back, I think there's going to be a flood out of equities into fixed income, and it could cause, maybe even a Black Monday type situation or something close to it, where I'm actually expecting this auction, the 2-year and 10-year auction on November 8th, to really drain pretty much all of risk assets, and I'm not expecting it to be pretty. So let's see if I can pull it up here. So let's see, November 8th. It's at like 2 p.m. So 10-year auction. Okay, maybe not a 2-year auction, but 10-year auction should be very interesting. So we'll see how that goes on November 8th. And I'm expecting Monday, which Mondays have been up days for most of the time for the past few months. I think this is going to be the first Monday that really goes red. So be careful, watch out, mind your stops, mind your trades. Everybody take care. Have a good one.